A warm welcome and wish you all a very happy learning. We're going to discuss now a very important topic, sources of finance. Finance is important for all of us because all of us need money. In fact, money in the pocket makes us feel very happy, even if it is only rupees 100. You still feel happy about it. Therefore, sources of finance is absolutely critical to understand. Let's get into the topic. What are the learning objectives? Number one, we'll understand the various sources of finance. Then we'll see what is the importance of business ownership, that is business owners, in obtaining this finance. What are the various criteria to obtain loans from banks? Are there other alternatives of borrowing money? We'll also look at that. And we'll also touch base on government aid as a means of borrowing. Let's watch a video first.
Money, 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 must be funny in a rich man's world. Money, 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 always sunny in a rich man's world.
Wow, that is a very famous song from the Swedish group ABBA, Money, Money, Money. A very important term. Yes, the word finance actually represents money. That's why I said money in the pocket always makes us feel great. It is the lifeblood of a business, no doubt in that. More importantly, finance can either cost us or can generate money for us, or it can do both. What are we saying here? Let's say we go for a yoga class, which means I'll have to invest money to go and learn yoga. Now, the benefit I get from yoga is actually intangible. I'm saying intangible because I won't get any money, but it'll keep me happy and healthy because I'm syncing my mind and body. But then it can also generate money for me if I start my own yoga classes and teach yoga. Therefore, here is a situation where an activity can either cost you money or generate money or give you both. But a very important aspect to be noted here, the word finance is actually beyond money. Why are we saying beyond money? Because it can be an arrangement in exchange for, very important, the ability to do all the things you want to do. What are we saying here? We are saying here that even if you don't have that money, there are still means of securing the money in an ethical and proper way. How do we do it? Let's watch. So what are the various sources of finance? One of the important sources of finance is from the business owners themselves, which is nothing but their savings, their personal investment. The other important source is loans from the banking fraternity. So you can go to a bank and secure a loan. And of course, there are various other ways by which we can borrow money, which include factoring services, invoice discounting, leasing and hire purchase, and franchising. And not to forget a grant from the government, which we call as a government aid. Let's understand business owners. Who are they? In all reality, who can be the owner? An owner could be an individual like me or like you, could be a group of individuals, or could be a company, that is many set of people. Let's understand the very first principle of a business owner, a sole proprietor. As the name suggests, a sole proprietor means single owner, that is only one person runs the show. So it could be a grocery shop owner, it could be a newspaper agent, or could be even a florist, which means if I run the business, all profits belong to me. At the same time, all losses also belong to me. So which means the benefits as well as the losses is all mine. Partnership. Let's first watch a video.
The partnership is when two or more people own a business without incorporating. Seymour and Chucky have just formed their own partnership to sell coiled plastic play toys to commuters. A partnership is easy to form and has a similar tax arrangement as the sole proprietorship because, just like the sole proprietorship, the partnership is not a separate taxable entity.
There are two main types of partnerships, general and limited. A general partnership is when each partner is involved in the day-to-day management and has unlimited liability for the debts incurred by the company. Limited partnerships, however, are a little different. In most limited partnerships, there is a limited partner who supplies the money and a general partner who supplies the expertise. Limited partners are liable only to their amount of investment in the partnership. However, their power in management of the company is also limited. In other words, in limited partnership arrangements, general partners run the show, just like you and your parents.
Again, an interesting video which tells that when two or more people they join together and run a business activity, it is called partnership. And it is very easy to form. More importantly, we also saw a couple of types of partnership. One was called general partnership and the other was called limited partnership. In most cases, it is a general partnership, which means that my liability is unlimited, which means if the business needs cash, I'll have to somehow pump the cash into the business. There is no limit up to which I can contribute. So it is both a benefit as well as a bane. Let's understand this further. So it is merely, in simple terms, an agreement between two or more people who join together and carry on a business activity. Let's look at a couple of examples. Yahoo and Twitter. They entered into a partnership in the year 2010 where Yahoo users, they could have access to the Twitter sites so that Yahoo users get the benefit of tweeting on the Twitter. Similarly, Samsung and Microsoft, they have a partnership, and in this partnership Samsung is using Windows 8 in all their smartphones. A beautiful way of two or more people joining together and then conducting a business activity. Now, what is important here? The share of capital, that is the contribution that goes into the business, as well as the share of profit, has to be clearly defined. That has to be crystal clear. Otherwise, there could be disharmony among people who are conducting the business.